You're listening to Flip Empire, the show committed to helping real estate entrepreneurs who want to build their empire without sacrificing their life. Your success and freedom starts now with your host, Alex Pardo.
Welcome, guys. So excited to have you join us on a masterclass here on the Flip Empire Show. I got my buddy Wyatt Reed in the house, and guys, we got some cool stuff to cover on today's podcast. In a minute, I'm going to introduce you to Wyatt. He's actually hasn't been in the world of podcasting really all that long, so I'm excited to introduce you to him because just a genuine, down-to-earth dude, and is doing some cool stuff. Hasn't been in the business that long, relatively speaking, right? But he's doing some really cool things, and he's got a heart for service and for giving and impacting people. So on today's podcast episode, we're going to talk about the BRRRR method, and then we're going to actually piggyback seller financing on the BRRRR method. That's kind of one of Wyatt's areas of expertise and the specialty and where he's focused today. In addition to that, not too long ago, some people transition, like myself, we transitioned from single family to self-storage facilities or to other types of commercial assets. Well, Wyatt has actually been able to successfully continue to build his single family investing business while also acquiring two different self-storage facilities at this point. And I know he just recently got started with that not all that long ago. So we got a lot of cool stuff to talk about today as far as the BRRRR method, seller financing, which, as you're about to hear, is just going to be an extremely, extremely valuable tool in the environment that we're in today and heading into 2023. Definitely want to understand how to communicate with sellers, how to structure seller finance deals. And then we're also going to talk about some cool self-storage stuff that he's done. So grab papers and pens. I never say that, but I have a feeling this is going to be jam-packed with valuable information that you can take and implement in your business. And that's really the entire goal and focus and reason the Flip Empire Show exists. So with that being said, my man Wyatt, welcome to the podcast, my man.
Man, thank you for having me.
Yeah, dude. Yeah. Super pumped to have you, dude. So, man, for people that might not know who you are, well, first of all, how long have you been investing in real estate?
So I'm going on 4 years now. Feels like a lifetime though, man.
It doesn't it, man? I'm going on, I don't know, 18 or so, and that feels like a lifetime. But it's so impressive to just kind of watch your journey over the last year and how much you've been able to accomplish in 4 years. And obviously, people that follow the show know that one of the things I like to do is highlight the challenges, the lessons learned, the L's, quote unquote, that we take from time to time, because in my experience, I learn, I don't want to speak for others, but I learn just as much, if not more, from just kind of the roadblocks that people had to go through or their stumbling blocks that got in people's ways. So by no means has the last 4 years been, just unicorns and rainbows the whole way, right? Like, man, you've had to bang your head and learn some things along the way. And we may get into some of that stuff depending on the conversation. But yeah, man, tell us about yourself. How did you even get into real estate? What were you doing prior to that? How'd you get in? And then we'll talk about what the business looks like today.
Right. So I was a manufacturing engineer beforehand. I worked at a couple of different factories. And then around 2018, the end of 2018, I had already scaled to where I thought that I wanted to be in life. I had the great job, great salary was what I thought was a great salary at the time. I got the house that I wanted to be in, the car I wanted, and, I was married and had a kid. Right. And so like at age 21, I was already there, and I was like, well, there's got to be more than this, because I don't want to do this for the rest of my life. Right. And so, like all great millennials, I took to the internet to find, how can I make more money?
Yep. Awesome.
Man, Chris Crone, he was one of the ones I seen on YouTube pulling up in his BMW i8 talking about real estate. And I was like, well, looks like it's going to be real estate, man.
Isn't that amazing, man? That's how, I had an interesting conversation on the last podcast, which I definitely encourage you guys to check out after this one. But we had a conversation about just to go off on somewhat of a related tangent about how influencers now and thought leaders and educators in our space, especially real estate, how they use the flashy cars and the sexy toys. And I don't think it's a right or wrong, right? To each his own. But look how it pulled you into real estate. And I think that's that's part of the reason a lot of people do that, is because it shows a certain lifestyle that especially a lot of younger people want. And I think what's interesting is that you'll find the older you get and the more mature you get in this business, your desires change. And not, by the way, not that fast cars and all that kind of stuff is bad, because I like them too, right? But it's just interesting that how that definitely attracts people, especially the younger crowd.
Yeah. You start to want more of your freedom than the materialistic items, right? That's what I've started noticing. I want more time with my family. I want to be able to pick up and just go sometimes,
man. So by the way, congratulations, because you're a new father. Right. So if we could give you a standing O and congratulate you, man, I'm sure you'd hear. I need one of those sound drops, dude, where all of a sudden people start cheering for you. But beautiful family, man. And the cool thing is, not to jump into your intro, because I'm going to hand the ball back to you, but the cool thing is that you can have both. We can have both. We can have the toys, and we can also have the freedom and the lifestyle that we desire. So anyway, man, just wanted to throw that in there. But go ahead. So Chris Crone, you got introduced to him.
Right. So I didn't want to send a bunch of money to some guy over in California or wherever the heck he was from, at the time. So I started finding local places to go to learn more about real estate. I got plugged in at the local RIA, and, that's where I met my first mentor. And man, from there, it just took off for me, because I'm one of those guys, man. And I'll tell any newbie that's listening, you just got to take action, right? A lot of the things that we teach, it works, right, as long as you do it. So it's the roadmap's been laid. It's just you gotta do it, right? And man, so I took massive action and just got. I think within 6 months, I got 4 properties under contract, and that was just learning the basics. And man, I got hooked from there. And then it kind of going into one of those struggles, right? The first 4 or 5 properties were not bad at all. They were pretty easy to get funded. They were all the BRRRR method, rental properties, little ghetto properties and things like that, super low purchase price and, higher rent. And I was able to BRRRR out all of them, right, and not use any of my own money. And then I started getting into flips. And my first flip went really well. It was a small 800 square foot house, completely took it down to the studs on my first flip. And, I made around $20,000 on it. And then, I got a big head at that point, man.
Talk about, elaborate there.
Yeah. So, man, I started looking at properties, instead of having like a fearful mindset towards them, as far as like structural work or do, a bigger rehab, right? I just gutted an 800 square foot house, which, it doesn't take that much to do, in North Alabama, Southern Middle Tennessee. And, I was on top of the world. I made my first $20,000. I had cash flowing rental properties, right? And so I felt like I could just take on the world. So I got to this second flip, man, and I got this wholesaler down quite a bit. And then I turned around and I was like, I just had some bad feelings about it. The inspection came back. There were some structural issues. And then I went back to him. I was like, man, I don't want this thing. And I went back to him. I said, hey, I don't really want it. And he was like, well, I'll come down a little bit more. He came down a little bit more. And then I went back and I was like, man, I really just don't want it. I probably went back like 2 or 3 times and he came down every time. And I was like, you know what? Screw it. I know what I'm doing, so I'm going to take it on. Right. And, fast forward to maybe 8 months later, I was upside down, probably $60,000, man.
60 grand?
Yeah, it was bad. That was when I met you guys. First time I met y'all.
So that was a year and a half, 2 years ago ish?
Yeah, I think so. I think so. Yeah, it was going into about the middle of my second year. Yeah.
Okay. So let me ask you this, man, with the benefit and perspective of, having that 2020 hindsight, right? When you look back, and I think this could be valuable for some people listening, where do you think you went wrong? You talked initially, you said you got a big head, right? So like it sounds like you probably you didn't have that humility about you. And I think to a certain degree that confidence not to a certain degree, confidence is we all need confidence, right? Yeah. You have to have confidence to achieve anything in life. But confidence and arrogance sometimes can be a very fine line. I have found it sounds like you maybe have crossed over into arrogance. Yep. Talk about maybe being overly confident, maybe it was arrogance, and then where you felt like you went wrong looking back a couple years later?
Right. Anytime I talk about this property, man, I always say everything that could went wrong went wrong. The location was terrible. I already knew. I had never done a deal in that area before. I mean, in that city before. And, it was overpriced. There were structural issues. The guy that came in to quote me on the structure issue said, "Hey, man, you're fine on this part of the house, but you need to do this." And, I said, okay, well, I just need to get by. I just need to be able to, fit this in the budget and get it sold. Right. And then I went through probably as far as the cosmetics go. We tried to strip that one almost down to the studs as well. And man, I went through like 3 different contractors throughout that project. And, I also, here's something else. I pulled rehab money. I had more things going on. And so at that point, 2 things. I pulled rehab money from another project, right, which is a dumb thing to do. And then so on the back end, I didn't have enough money to finish that project. So that hurt me even more longer term, but it was a rough project, man. I mean, it was bad.
So one of the things I learned years ago is how, life happens for us, not to us.
Right.
Do you think, and I already know the answer, but I'll ask it anyways for the people listening, where do you think you'd be without the benefit of that kind of hard knock experience that you had with that deal?
Right. I've thought about that. There's no telling. I always said that was God, pulling me back in and saying, "Hey, you have the potential to do this, but it's going to be on our terms,
Man.
He's not going to give you anything that you can't handle, but he's not going to give you anything, that you're not ready for either."
That's right. And what's that saying that comes to mind right now for me is smooth seas never made a skilled sailor.
Right.
And dude, it's interesting, man, because at 2 years, and I don't even know if you know this, but 2 years into my journey, I kind of got out of the gate end of 2005, beginning of 2006, wholesaling. In the first year and a half, I was just rocking with wholesaling. And then I decided to jump into my first fix and flip on a $500,000 property in 2007, the middle of 2007. So just based on that year, you can kind of imagine what happened. But long story short, we didn't account for the market shifting. Our margins began to shrink. We went completely over timeline, over budget, and we ended up losing $101,000 or $102,000 between myself and my partner. So I lost $50,000 on that deal, which is a little shy of what you ended up losing. But I've always said, for me, that was probably my best deal.
Right.
Steve Cavanaugh, your coach and a mutual friend of ours, asked a year and a half ago, he went around the room at Ascend and he's like, "Hey, explain your best deal. Describe your best deal." I don't think you were in Ascend at that point. And I said, "Dude, my best deal, I lost $51,000. And everybody looked at me like I had 6 heads. And then I elaborated. And that was the deal that made me shift and look at masterminds, coaching, mentors as investments, not as expenses. I knew if I would have had somebody in my corner, I would have never gotten involved in that deal. But to this day, that's probably been my best deal because of the mindset shift and because how it forced me to look at things and change moving forward.
Yeah, the mindset was the biggest shift, right? And then, like I said, I met you and Steve, I think at a mutual event that we were at, and man, that's when I first kind of came in. I think I was right on the tail end of that. I was still in it at the time, and I was like, guys, what in the world do I need to do? And just being in that being in that group of people that have already been there, right? Because I felt lonely, man. There were nights that I was outside of that house in my truck, outside of my house. Before I even walked in to see my family, I was out there crying, because I was like, I've lost it all, right? Mm-hmm. And so it was very emotional, but it was a very huge shift in my mindset because, there were some guys that were in that group that were like 60,000. That's all you lost. Come on, you're going to lose a lot more than that. Right. And I have that, but, and it doesn't hurt after a long time. It still hurts. Don't get me wrong. But you start to have that mindset of, hey, it's going to happen and I'm going to make it happen regardless of the wins and the losses. Right.
That's right, man. Yeah, dude. And you deserve all the credit for getting out of that hole, right? We take 0 credit in that, but there is something to be said for just immersing yourself, around a group of people that are going to love on you, dude. They're going to walk alongside you, that are going to encourage you. And just that right there, what you shared right there, where somebody, I'm not sure who it is, but I think I have an idea, when they said, wait, 60,000 is all you lost. Like, think about that. You were probably in a world of hurt right there. 60,000 could have been 6 million to you, or 600,000, right? But to somebody else, 60 was like, well, dude, that's nothing, 60. And just that comment alone, some people might take that as an insult, but myself, I'd take that as, man, what a paradigm shift, that this 60 grand that I'm worried about is like nothing to somebody else who I'm masterminding with. Right. And just so just again, it's taking things and applying them as a for you, not a to you, and allowing that to propel you moving forward, I think is valuable. And dude, I'm proud of you, man, because you got out of that hole and it shaped you into the man that you are today. Again, now you're a father. You're just, so much has changed in your life, not just business, but personal. What else have you learned going through that experience that you've now applied to your business now? Again, not too long ago, you set your sights on self-storage. Now you own 2 self-storage facilities. You're keying in on a particular strategy on the single family side of the business. When you look back, how do you think that particular experience with that deal has helped you now?
Yeah, man. I look at things a lot differently now. You know, like I said, back at that time, I had multiple projects going on. So it's kind of like I didn't pay a lot of attention to it because it wasn't going right. You know, I was like, well, let me focus on the things that were going right. Mm-hmm. And I'm just going to kind of hide it. Right. And that obviously does not work. But that was an experience as well. It was like, well, did the contractor show up today? I don't know, but I don't want to think about it, a couple of days straight. Right. But yeah, I mean, it put systems and processes in place for me, coming from an engineering background. Now it's like, okay, well, we screwed that up. What are the lessons learned? Okay, now what processes can I put in place? What scopes of work can I do? Can I get multiple, contractors quoting these things, all the things I knew I should have been doing before. But now it's like, okay, I felt that sting. Let me put these systems and processes in place, right?
Yeah, man.
And I mean, from there, I didn't think at that point, I didn't think I would ever get into another flip. By the end of that one, before the documents were signed, I already had 2 more flips under contract ready to go. Right. Yeah. And I knew that, it wasn't going to be the same. Right. And we've pulled back moving forward a little bit. We've pulled back pretty hard on flips. They're such a headache, man. they're such a headache dealing.
Hey, man, you don't got to tell me, dude. Even though this is called the Flip Empire Show, it's as we talked about before, it's evolved and it's so much more than flipping or wholesaling or a particular strategy. But yeah, dude, 18 years in this business, I've done my fair share of flips, and it's not for me. And it's a great model, but you got to enjoy it. And right. I don't in particular, but.
Yeah, that's what I love about real estate. You don't really have to do what you don't want to do, right?
That's right, 100%. And by the way, I want to also expand my thoughts that I could successfully manage and operate a fix and flip business and not have to ever go see a house or deal with a contractor. It's all about the who, not the how, right? It's about who you put in this business and what systems and processes you have in place, and then making sure that you have just type A rock star people that are running and managing the system. But anyways, man, go ahead, keep going.
Yeah. And so moving forward a little bit, we started doing 4, 5, 6 flips at a time. Anytime we get done with one, we'd have 1 to 2 coming in behind it. And, it was just such a headache. Not saying that we had, I don't think that we lost money since that first one, right? We made money on deals, but keeping all of those funds, robbing from one to pay the other, but, turn around and putting that money back with a sale and things like that, and keeping contractors going nonstop. It was just such a headache for us. And so we started learning more about the creative financing side of things. I think Scott Gillinet calls it the long flip or something like that, slow flip. And slow flip. Yeah, someone that was in our market was doing it, and they were like, man, you guys really got to get in on this. And so we started learning. It took us a while to pull the trigger because, those things that are just, you just don't understand. And you're like, okay, well, I got this rocking and rolling. It's a headache, but I know it, right? I don't really want to pull the trigger on that. And man, I kick my butt every time, but I'm like, I should have started this way back when. Right.
Yeah. So explain for people that are listening that maybe haven't heard that term slow flip. And again, you referenced a mutual friend of ours, Scott Jelinek, and I'm not sure if he's the one that came up with it, but talk about what exactly is a slow flip.
Right. I was just talking to him the other day. We do things a little bit differently and in the people that we target and everything like that. But essentially, we purchase a property, say we purchase it for $100,000. We've got a loan on it, with the bank and have terms with the bank and everything like that. Well, we turn around and we sell or finance it to a tenant buyer who is going to buy it long term, right? We act as the bank. So they bring a big down payment and then we put terms on them too, anywhere from 20 to 30 years at 10 to 12% interest, right? And in this kind of market that we're going into, that's really powerful because, on a rent, or on a rental, you can raise rents and things like that, but you're going to have turnaround and things, things and such. But on these people are actually buying the property and they put a significant down payment down. So they're not going to just leave and forfeit that down payment. Yeah. And so with the interest rates going up on us, we have clauses in our contracts that say, hey, interest rates can go up on you guys as well, right? And so we always have that 3 to 4% difference. And we always have a $30,000 difference between what we purchased it for and what they purchased it for. I mean, 30 is a minimum. We have properties that $70,000 spread.
Right. And man, one of the things I love about creative financing, and we talked about this with Ashley and Antonio Denmark not too long ago, which I believe they're in your same market. And it's interesting because this having you guys back to back was totally unplanned, right? But I think the reason I'm interested more in having these types of conversations and making sure that people are aware of all the different tools that you guys have out there when it comes to creative financing,
right?
When it comes to structuring creative financing deals, whether it's lease options or buying on terms. I mean, there's so many sandwich lease options and there's so many different ways to do it. And I think you're doing yourself a disservice if you're communicating with homeowners and you're only giving them one way to work with you.
Right.
Imagine going into a business and them saying, hey, cash only. Right. And there's still some places like that. Right. But a lot of people don't carry cash and people have Venmo and Cash App and Zelle and they have credit cards and debit cards. But imagine if you said, hey, it's only cash, like you're alienating a certain percentage of people that want to work with you, but just don't have the ability to because you're not giving them ability. So think about that when you meet with sellers. How are you giving them ways to potentially work with you? How can you service them and really help them out of a situation? So the slow flip, you're basically doing the BRRRR method, right? And I'm gonna ask you to basically outline and define what that acronym is. But you're doing the BRRRR method, and then you're selling them the property on terms.
Yep.
Mm-hmm. Okay, so for BRRRR, we've covered this in previous episodes, but 670 something episodes in, I don't assume that everybody has listened to these episodes in the past to remember. So what exactly is the BRRRR method?
Right. So it stands for buy, renovate, rent, refinance, repeat. So what I always say, though, the way that we use it is we're teaching people how to leverage other people's money, right? We were at a point in time where we were leveraging 100%, right? And that's all about how you buy, because, that gets into a sticky situation if, a refinance doesn't go your way. We've had those before, but now we're at the point to where we're putting a little bit more money in the game, in the skin in the game for us, right? We're coming with the down payments, things like that, hard money lenders, private money lenders. And for the longest, I used a hard money lender, and they're just kind of like asset based, right? They're looking at the numbers on the deal more than your financials, right? But then I got stopped by one of my hard money guys, and he was like, "Hey man, we're at I think it was like 1.2 million." He was like, "Some of these things need to refinance." Everything was on the road to refinance. I mean, there was no issues at the time. We were just leveraged pretty high, and so I was talking to this guy and I was like, man, I'm going to lose this deal. It's a great deal. It's only going to take, 90 days to get it done all the way through and get the money back. And it was one of my friends, a personal friend of mine. And he was like, well, I can give you $100,000. And I was like, man, that was easy. I was like, so then the wheels started turning, and man, I just started talking to people and raising capital, and man, that's a game changer right there.
All right, dude. So yeah, you just stepped
into it all.
You just stepped into it and walked into like a whole different conversation that now I have to ask you about, right? Because it's interesting, and this also wasn't planned. But when I think about outside of personal development, outside of like core skills like marketing, communication, and sales, right? When people ask me, I'm talking to my daughters now a lot, and one of my little one, Alessia, she's very interested now in making money. So I'm teaching her how to buy low and sell. I'm teaching her how to grab old toys and throw it on eBay and list it. And she's starting to understand the basics of like gross and net. And so as I share all of that, one of the things that comes to mind is outside of those basic skills, when I think about the valuable tools that we need heading into this market, right? And as the market continues to shift, I think about the ability to create win-win deal structure, creative financing, which we've alluded to. And I think about your ability to raise capital, right? Capital is the lifeblood of the business along with marketing. So it sounds like you indirectly kind of just raised capital off of your buddy that mentioned to you. And by the way, that happened not by mistake or on accident, but by the fact that you were sharing with your buddy what it is you were doing. Right. So there's a valuable lesson that in and of itself is just sharing and documenting that. That's why leveraging social media, being a producer and not necessarily a consumer, can be beneficial because it opens up doors and opportunities for you. Right. How exactly are you approaching people in your network, whether it's friends, families, whatever the case might be? How are you approaching them about raising capital for your deals and giving them the opportunity to invest in your deals?
Right. It's all about communication and relationship. I haven't raised money from anybody that I haven't like really worked hard on a relationship with, and really went out of my way. That guy, for example, we were friends for 2 or 3 years before that. Right. And some of the other people that I've raised money from, we weren't friends that long, but they know what I've done. We've been in the same groups, the same networks. They know what I do. They know that it's a genuineness, right? Good relationship. But like you said, it's a win-win. So for me, it's always just been bringing deals, and that's what it's for on, the real estate investing side, right? If I brought a deal to a real estate investor, it's a lot different conversation than somebody who doesn't know about investing, right? Yeah. Because the real estate investors, they already know what hard money lenders get. So they're like, well, why would I give you less when you're going to be using this guy's money for, so then it's a different conversation with some of them, right? Yeah. But like that's why I try to focus on people who aren't necessarily in it. That way I can say, look, I got a deal. You've got money sitting in a savings account. You've got money in the stock market. This is what your returns are. This is what your return would be with me. Right. And then it's just a conversation like that.
That's right. And one of the things that's been helpful for me is I don't directly pitch people on giving them the ability to invest with me. I merely plant seeds. I kind of pique their curiosity, and I shift the conversation to something completely different. Yep. And oftentimes, not always, and that's okay, but oftentimes they'll be like, oh, hold on. What do you mean? How does that work? And then I don't get into it there. Then I set up a call or a Zoom call or a meeting over a latte at Starbucks or wherever. You know what I mean? So that approach has been beneficial for me. And it's one of those things that when you come across as needy, you rarely get what you want. Right. But when you come across as and you genuinely feel like you're giving somebody an opportunity to earn a higher rate of return on their capital than they otherwise would, because many people, let's be honest, just haven't been educated or haven't taken the time to educate themselves on investments and how to grow their money. Right. And by the way, I hate to have to do this, but it's the classic disclaimer of Wyatt and myself and Wyatt. We're not quote unquote experts. We're not giving you legal or financial advice. As always, consult with the pros. We're just merely sharing with you our experience, what's worked, what hasn't worked, And so, take it with a grain of salt. But yeah, I really believe that if you walk away with nothing from this podcast, which would be hard to believe, but if you walked away with nothing, but you just got the fact that you need to be planting more seeds with people and sharing with them what you're doing, piquing their interest as to how you can potentially help them earn a higher return on their money, that can be extremely valuable. It could be extremely be a game changer for you, I should say, in 2023.
And I'll say this to add on to that. If you do it right and you do what you say you're going to do, man, for me, the people that are investing and making money with me, they're bringing other people as well.
Yeah, man.
Hey, I got a friend that's got $100,000. I got a friend that's got $50,000. Well, bring them in and we'll work something out, right?
Yeah, buddy. Yeah. And to your point, to piggyback on the piggyback, if that's ever been said, people want to share with their friends and family when they feel they've made a wise choice or a wise investment. To your point, I find that people just, man, you ever close a big deal and you feel encouraged to share it with certain people that have your back, that want to champion you, that you just naturally want to share that good news, not from a place of being boastful or anything like that, but just man, you want to celebrate with people. Imagine experiencing wins and having nobody but yourself to enjoy those wins. And that might be okay, but man, you want to share it with your loved ones. You want to share it with people that matter. And I find that when you do what you say you're going to do and you treat people right and you put your private lender's interest always above your own, you're going to come out winning in the long run. And they're going to come out winning. And that's really what it's all about. So dude, what else would you share with regards to seller financing and just how to have those conversations with seller, how to structure those deals, anything that you can share that you've learned either to do or not to do?
Right. Man, so here in North Alabama, we have a higher percentage of Hispanics in the community. So we work with a mostly Hispanic community. And man, just using our network to, because at first we were all over the place, man. We were using Google Translate to talk back and forth with these people. And
wait a second, Wyatt. I've known you now a couple of years. You mean you don't speak Spanish? I couldn't tell with your accent.
Man, yeah. And so that goes into what we were talking about too, is how do you get people to trust you when, you're going through Google Translate to communicate with them, right? And so being genuine, working extremely hard on that relationship, that's with the tenant buyers, the end goal, right? The tenant buyers. And so we've structured things and put systems and processes into place where we no longer going over the contract with them. We're not giving them the amortization schedule. We'll tell them about the terms and all of that. We've got someone that does all that for us, that shows them properties and all of that. But we have set it up to where the translator meets with them at the property, goes over everything, and then they do the whole contract, construct the whole contract at the attorney's office, just right across the street from our office, right?
So wait a second, hold on, just to make sure I follow this. You actually hire a translator to meet with you at the seller's house?
Yep. Mm-hmm.
Dude, I have, of all my years in doing this, which is that blows my mind. I've never heard of that approach.
Right. So
which is not, when you think about it, it's not anything super crazy, but it just goes to show you that even with not being able to speak the same language and just bringing a middle person in that probably doesn't fully understand real estate the way that you're able to articulate and communicate it, you can still get deals done.
Yeah. Yeah. Well, let me tell you this. She is a rock star seller financing investor as well. So I got a double hitter on that one.
Okay. Not well. So you smart man, dude, smart man. But the point still stands that you could probably still just find a translator that has just, solid communication skills, right? That can, if that person doesn't understand something in the contract, they can talk to you and so you can communicate that way. But I'm curious, how do you compensate this person? Because obviously this is a successful real estate investor as well. You said they're a rock star. So are you giving them a piece of the deal or how does that work?
Man, so we pay her 1.5% of the total purchase price.
Okay.
Right? And most of the time that's she gets that in the deposit. So she'll get like a $2,000, $3,000, $4,000 deposit from these people just to make sure, they're going to show up to the title company and, go through all the contracting all of that, finalize everything. But she's a part of my mastermind as well. She's a student of mine.
I love it.
She joined, about a year and a half ago. Nice. And she was doing both sides. She was doing the retail side. She was a realtor, and she was wanting to get into investing. And, we had sat down and had really great conversations, and man, she turned around and just blew up. And, she's 20 years old, 21.
Wow.
And she's
good for her, man.
Yeah. So
good for her. It basically sounds like a junior acquisition manager position, or an acquisition specialist, or a junior home buyer. And that's just another example of, like, some people would get completely overwhelmed and stuck and not take any type of action because they don't speak the language. Oh, I'm in a market where I speak English and it's a primarily Hispanic area. I can't communicate, and people get stopped there. But I think the most valuable resource is resourcefulness.
Right.
And dude, you hit the nail on the head there by saying, hey, I was using Google Translator. It wasn't the most efficient way to communicate, although it's a tool, it's a resource. And so you just found the right who. And you structured a win for yourself and your company, a win for them, and a win for the homeowner. So absolutely love it. Well, dude, before we get you out of here, man, I want to hear about self-storage and your journey there. So most people have a hard time focusing on two completely different asset classes, although there is some parallel and some crossover as far as marketing, as far as the certain skill set that you have to have. They are two different asset classes. First of all, what was it that made you want to get into storage? And did you ever struggle with, hey, do I need to choose one or the other? Or I'm curious how you decided to tackle both and how you were able to do that successfully.
Right. So, first of all, how did I get into it? I joined a mastermind that seems to only talk about storage. It seems like. No.
Oh, God, that's funny. You're talking about Ascend, and we talk so much more than just storage. Don't get it twisted for those of you listening. But yeah, we do have quite a few storage investors within Ascend, in addition to other asset classes as well. So. Right.
And man, I just to touch on that conversation of should I choose one or the other? When I first got started, man, I still have this issue, and I think a lot of entrepreneurs do is the shiny syndrome. I want to do this, that looks good, sexy, whatever,
Preach, man.
Man, and so about a year and a half ago, I got with a really good partner. He's who I started REI Dads with, and not only him, but Lauren, man, she's been just great. They've been great at like being rocks for me, and, Lauren's on the softer side. John's more of the, hey, don't make dumb decisions, man. And
Lauren's your better half for people that don't know. But.
Yeah, absolutely. I wouldn't be where I am without her. But so I've never really been faced with that decision. If it makes sense, then we're gonna go for it. And we're gonna put the time in that needs to be put in, right? But on the flip side, you were talking about how to manage both classes, and we want to talk about the whole freedom aspect of this whole real estate thing, right? So Lauren manages our self-storage facilities, and John's wife manages most of our single-family seller finance deals. So that helps us out a ton.
Yeah. So it's not trying to tackle everything yourself, but just picking your lane, understanding. I've always said, to me, the sweet spot, and I forget who I learned this from, but I've been using it more and more because I've been applying it as in my journey as I grow. But you think about kind of a Venn diagram, right? So a Venn diagram is just three circles and they all kind of overlap. The sweet spot is the middle. So I think about the things that fuel me, my passions, the things that give me joy and fulfillment. And you write those things down in that top circle. And then in the left circle, you think about what are my skill sets, right? What are the things that Dan Sullivan from Strategic Coach calls it your unique ability, right? Mm-hmm. What's your superpower? What are those things? Write that in that second circle on the left. And then on that right circle, write down the problems you can solve. write down the pain points people have where you can provide a solution. And then your sweet spot, Ikigai, I think is another resource for this, but that's the part in the middle where what gives you joy and fulfillment, your passions with your skill set, with the problems you can solve. Like, dude, that's the area where you need to live.
Right.
That's where you can multiply and scale and have a compounding effect on your skill set. Right. And so many people are out there just grinding and hustling, and they might be operating in one circle or part of two circles. But I find that if you're not intentional and purposeful about finding your sweet spot, you're leaving a lot of juice in life, dude. Not just life, but business.
Yeah.
What are your thoughts on that?
So something that you and Steve had really talked about, really helped me out, was having an owners meeting. I think it was you guys that were talking about that. So I don't remember how often you guys done y'all's, but we do one every month, and we just sit down and we say, okay, are you happy with me? Am I happy with you?
Yep.
Is everything going like we want it to? What's going on with the company from a really, from a high aspect? And then especially over the past 8 months, man, we've been really focusing on what do we want to put systems and processes in place to get away from, and what do we really want to do? What do we get fulfillment out of doing? And let's do that. Let's try to put things in place to where we don't have to be a part of going out to houses, making offers, getting houses under contract, dispo, and all this other stuff. Right.
Yeah.
What really fulfills us, and helping other people and doing all that is what we're driving towards. So, I would say right now we're about 90 to 95% hands off in the real estate business. And, in the next three to 4 months of, 2023, we're going to be right there, man, to where we're focused on what we really want.
Yeah, man. And that's a difference between having a high paying job where you're essentially the technician, the manager, and the entrepreneur, versus stepping into the owner's box. And it seems like you're well on your way there, dude. So, man, with that being said, I'm going to give you an opportunity to share where people can connect with you. And I'll flash it here on the screen for anybody that might be catching this on YouTube or anybody else. But Wyatt, best place for people to connect with you and just kind of find out about everything you have going on.
Right. So you've got my link tree up, just linktree/Wyatt Reed. You'll get all of my, Facebook, social media, Instagram, Snapchat, everything, TikTok. Find me on everything. We're putting out content all the time. So
yeah, very cool. So yeah, guys, linktree/Wyatt Reed. That's REED. So, dude, I'm going to get you out of here in this last question. You've been involved in this business now 4 years. You talked about a painful learning lesson where you lost 60 grand, and that really helped shape you and gave you a lot to learn from and draw from as you continue to just go down this entrepreneurial journey. When you look back, man, over the last 4 years, even before that, what's the one thing you can share with people that you would say, hey, man, learn from my mistake, or learn from this lesson, or learn from this experience? So looking back on your experience, what is it you can share with people that you think they might not know, or maybe we haven't even touched on in this episode?
Right. Oh man. That's a tough one. Mm-hmm. But something that really sticks out to me is not just something I've went through, but the whole journey in itself. We hear this all the time, especially people who like scroll through reels. I hear it all the time, but I always stop every time I hear it. It's, don't wait to get to the end of the journey to enjoy it. Right. You think that you're gonna work your ass off to get to this one point in time and you're going to be happy. Right. You've got to enjoy the journey and, take time throughout the whole thing, and that's something that a lot of us, we wake up one day and it's, Monday, and then we wake up one day and it's Friday, and like a whole week's gone through and it's been insane, but we really need to step back, in meditation or whatever you do in your routine, and just really think about the things that you enjoyed throughout that process. Think of all the friendships you made, or the connections you made, or, the things that you've done. Right. Yeah. And enjoy that.
Yeah. There's a lot of wisdom in that, brother. And, sometimes I have to remind myself that the destination's important, but once you arrive, you're going to enjoy it. And then it's that new car smell, and you're going to go out and say, okay, well, where can I chase the next mountain, right, or the next summit that I want to climb? Right. So it's really, when you think about it, the journey is the destination. So,
100%.
Yeah, man. So, brother, I appreciate you coming on here, man. Thanks for, it's good to have you on, dude. And let me tell you, man, I wouldn't have guessed that this was your first podcast. So I have a feeling I'll be seeing you out there, continuing to put out more valuable content, man. So guys, you can connect with Wyatt on his Linktree /Wyatt Reed. And yeah, man, it's also, dude, it's I get a view to watch Steve and I getting a chance to walk alongside you, and you being part of the Ascend family, and just watching you come in, experience, but in kind of a world of hurt with that deal, and to where you are today and where you continue to grow, not just business wise and professionally, but personally, man, I think is an inspiration for a lot of people, and it's awesome, dude. So
man, I appreciate it.
Keep climbing, bro. Keep climbing. So guys, thank you as always for sticking with us. Hopefully you extracted some valuable nuggets from this podcast episode. And we got so many more episodes where we've probably covered anything you can think of. So make sure you're subscribed, flipempire.com /podcast. That'll take you over to Apple Podcasts, where you can subscribe so that you're notified every Monday morning when episodes come out. And I believe this is 670 something. I'm starting to lose track, man, just like my age. So either way, I draw and I extract something from each and every one of these as a host. So hopefully you are as the listener. And with that being said, I so appreciate the support and you subscribing and being a part of this journey with me. So have an incredible day, and we will talk soon. All right, my friend, I hope you enjoyed that Flip Empire episode and got a lot of value out of it. Make sure to check the show notes page for any resources that were mentioned. And speaking of resources, honestly, I don't think I've done the best job of sharing with you my top curated, highly recommended tools and resources that I use in my business or have used in my business. In some cases, these are affiliate relationships with people that I highly trust and respect. And I know these tools and resources can help you and your business go to the next level. And as an ethical bribe, if you decide to try out one of these resources using my link, I will go ahead and send you an unadvertised bonus. I'll send you something of high value. All you got to do is shoot me an email, alex@flipempire.com. Go ahead and let me know that you that you tried out this resource, and however I can help you getting started with that. Chances are that I know it very, very well and currently use it or have used it. So make sure to check that out, flipempire.com /resources. And if I can be of help or service to you in any way, just shoot me an email, alex@flipempire.com, and I will do anything I can for you. Have an amazing day, and I'll catch you on the next show.